How's about now? Here we go. Let's try this again.
Is that better?
There it is. We didn't have no audio. If you guys are just tuning into the channel for the first time, I'm Krulsawat with Simply Vegas, your Las Vegas realtor, bringing you or connecting you to the Las Vegas housing market. I got my man here, Dan French with Guarantee Rate, the one and only real estate guru. Can you guys hear me out there? Let me know.
Looks like they got it now.
Oh yeah, you know why? Because I had to turn up the volume on it. What's going on, buddy? How are things going with you today?
Great, man. How's things going with you? I know a lot of movement in the market right now, even though we're starting to hit those months that maybe start to slow down a little bit, but
yeah,
things still moving.
When does it normally slow down? Well, for financing, would you say like October, November, December is like the slowest months?
Yeah, I would say so. I would say that it's really people start focusing on other things. Doesn't mean people don't buy. But.
Yeah. But also depending on your market. I mean, we have such a hot market, so it's not even slowing down, dude. And that's the topic that we want to talk about today. What's going on with the Las Vegas housing market? Get you guys all caught up. We haven't talked about this for some time, so today we're going to be just talking about financing and also the Las Vegas housing market, what to expect, what's to come. So also, if you guys have any questions, go ahead and submit your questions through the comments, and we'll try to read some of these comments towards the end. Okay. So as far as this weekend, what'd you end up doing this weekend?
This weekend, what did I do? I did a lot of work. I worked this Saturday. The previous Saturday, I went to the lake. This last Saturday, I worked around the house. I also worked. I actually went out to eat. We went out to Famous Dave's over here.
Yeah.
Yeah, it's pretty nice.
Famous Dave. That's like a barbecue place, right?
Yeah, it's pretty good. You know, it's very similar to Lucille's barbecue.
Yeah.
And so I brought brought my family, had my parents with me. It was very nice. And I actually ended up sending my girl. They went and played bingo.
Bingo.
Yeah.
That would be a casino?
Yeah, they went to Sunset Casino.
I think I've done that a couple of times. It's pretty fun. But they made it very easy for people where I think you can get like one of those electronic ones too, right?
Yeah.
Or you can just kind of buy those little those dots. I think that's what they're called.
Yeah.
Yeah, I've done that probably once since I've been out here. I mean, it's kind of cool. Just kill some time.
I think too, it's nerve-wracking because my dad and also my girl, they're sore losers a little bit. So
really?
Yeah, my mom, she's very positive and she's always the one that wins.
Like, well, how much do you win, or what do you win?
Well, I think a lot of times it's very hit and miss. A lot of times they win their money back, which is they buy in for like 100 and they get like 150.
That's not bad.
Yeah, it's not bad.
50%.
My mom though actually won $31,000.
Oh crap! When was this?
This was back when I was in California at Indian Casino. Indian there she was.
You were with her?
I wasn't with her. I was too young.
Oh, gotcha.
Yeah, but she won $31,000 and it was crazy because my uncle, he's not living anymore. He bought her in. He basically said, "Hey, I'm gonna front you the money."
Yeah.
And you can go down there and you can gamble. And that she went down there and gambled on his money, but they split 50-50.
Oh, at least he got 50% of it, and he got his money that he let her borrow back.
So he's old school.
Yeah.
And he showed up with like a shotgun and some guns just to make sure that he.
Well, I guess 30,000 back then was a lot of money, right?
Yeah, it's like it's probably equivalent to like 60 today.
Oh, is it really?
Yeah, I would say so.
Okay, cool.
You know.
Now, I want to talk about the financing part.
Yeah.
What's going on in finance in the market
so,
today?
Like I said, I think some of the applications that we see, the data that's coming out, mortgage applications have been down.
Really? Like how much down?
Not drastic, but I think from the beginning when everybody was in the frenzy, rates are still low. Refinance applications are down 6.5%. And I think overall they're down about 8%, especially for my company. We see a big drop in about 8%.
I'm surprised you don't have more people financing right now, especially with what's going on. Is it because they're losing their jobs?
I think unemployment is there. Although unemployment, when we first started with COVID, was at 14%.
What are we at now? Do you know?
Yeah, it's like at 7.5%. So it's lowering. So that's good.
Unemployment here is only 7%?
No, nationally.
Oh, nationally?
Yeah.
I wonder what unemployment is. I haven't checked the numbers for some time.
But I think that does play a big part.
Yeah.
As far as people doing that. Plus, I think that also rates aren't really doing much and the election's coming up.
Yeah.
And so there's a lot of things going on. Plus, I think there's a lot of things going on with the stimulus package. There's hit and miss on the stimulus package as far as are they going to produce a fourth one or not? Or are they going to try to push one out?
I don't think they are, though, based upon the way that things are going now.
I don't think they will, but there is caution. They think that it's obviously going to stimulate the economy, but there's other people out there that think it's going to actually lead to inflation.
Yeah. Or even hyperinflation. I don't know. It just depends. Some people are going to say it's going to end up in deflation, but then certain areas of the consumer market, you're going to have hyperinflation.
Yeah.
So that's the $1 million question: is housing going to have hyperinflation or deflation? And that's what we need to figure out. But the problem is that you'll never have a crystal ball. I mean, you could be accurate, 9 times out of 10. Next thing you know it, on that 10th time, you're rolling dice and you got your money all into the deal. And next thing you know it, this market goes sideways, dude. There's
a real estate agent out here, too, that I listen to a lot of the ESPN radio and Fox and stuff like that. And they're pitching on the radio. One of the things is, do you think that the economy is going to crash? Yeah. And if so, give us a call. We'll set you straight.
Mm-hmm.
Nobody really knows. You know?
I mean, if they knew, they wouldn't be on the radio.
Yeah, exactly. So it's kind of a hard thing. But
gotcha.
I think, you look at overall, though, housing is strong because home purchasing hasn't been this high since 2006.
I know, and that's a crazy thing about it is because if we take a look at the data here, which is I printed it out this morning for you guys. Well, you know what? I'm lying. I printed it out before the show. I was actually in a rush to get on out here. The price per square foot right now for a single-family residence is about $184 a square foot. And that's just the median price point across the valley. The average is $187 a square foot. But believe it or not, the last time that we actually did a radio show on terrestrial radio, the average days on the market was 19 days. Guess how many days a home right now is on the market, dude?
I'm going to say 15.
Dude, 13 days.
Oh, my gosh. It's even getting worse.
And let me tell you, man, I recently, and I'm a pretty good negotiator, I would say. I don't want to toot my own horn.
Yeah.
However, here's the thing. I submitted an offer 4 times for a buyer that's out of state, okay? They're fully approved with you. It's actually one of our clients, and they're at 500 and below. And I write the cleanest offers based upon today's customary practices as far as what the seller pays for, what the buyer pays for, right?
Yeah.
And we asked for no contingencies, but still got beat out. 4 offers. Well, actually 3 offers, okay? And here's the thing. You're probably thinking, why not offer more money? You can't offer more money at this time because you're going to run into appraisal issues. But the sellers are really, really just going for the highest offer at this time. They're like just willing to gamble. And that's a big problem that I'm seeing is as far as the appraisal. And, me and my team, this week alone, we had 4, appraisals that were done that actually came in low. One of them I knew was going to come in low. We offered $800, but I knew it was worth about $775.
Yeah.
But that was the whole strategy in the game. Is sometimes what we do is get the sellers under contract, beat everybody out to the punch. Then once you're under contract with that seller, now you have more control of the situation as far as dragging that seller into deep and murky waters. Because what I mean by that is once you're under contract with the seller, you have to understand on an $800,000 home, your payments are probably like $4,000 a month or maybe even more. I don't know.
Correct.
Okay. So, by having their property tied up for like 30 days, I mean, that's like $4,000.
Yeah, that's a long time too. Yeah.
So the question is, are they going to throw it back on the market and also have an appraisal attached to it? Chances of that happening is very slim.
Right.
But going back to my point, what I'm seeing with the market, it's just so freaking crazy right now that sellers are asking more for what their property's worth. Buyers are submitting their offers for more than what the property's worth and willing to take that gamble and that chance. It's such a crazy market right now, dude.
So if the appraisal comes in low, they're still willing to go above price and pay the difference, the buyers.
In certain circumstances. But what I'm seeing is that before the appraisal is done, as realtors, we run the comps and see what the property is worth.
Yeah.
So let me give you an example. There was just this recent one for 465. We offered 465, but that was like top dollar, right? Now, sometimes other buyers are willing to go above and beyond this 465, which I would never put a buyer in that situation, knowing the seller is not as motivated as far as selling it. We literally just lost a deal for one of my agents, right? Submitted an offer, and they weren't willing to drop it by $30,000, and it appraised $30,000 less. The crazy thing about this was the home was built in the early 60s, and we know when you buy a home in today's market in the early 60s, right, the materials and the supplies and the plumbing, the stuff that they have is a little bit older. It's not as efficient as newer homes now. So there was a lot of deferred maintenance, okay? But the seller decided to reject the counter addendum, right?
Mm-hmm.
So, and what this means is if the home comes in pricing a little bit low because of the appraisal, you would create an addendum, and you would say purchase price to be this price, see attach appraisal, okay? Now that gets sent on over to the seller. And normally the seller will reduce the price, but that is such a big gap where the seller's not willing to reduce the price, but they are willing to chance it to put the property back on the market, even though that an appraisal is attached to the property. However, I think the strategy behind that is because that the way that the market has gone up, we've gone up over 10% since the beginning of the year.
Wow.
Okay. That's a pretty big growth.
In 9 months.
Yes. That is crazy.
Wow.
Home pricing is just like out of this world right now.
Yeah. No, it is.
So I just don't understand what is going on. But what I'm starting to see is that the sellers are willing to take their property back off the table, put it back on the market, let the market catch up to that price, or find a buyer that's willing to pay that price.
Well, you hear too on the radio. I hear this on the radio. I see a lot of marketing too on social media.
Yeah.
A lot of realtors are marketing that we can sell your house top dollar and you get what you want for it. And I'm not saying that you can't.
Yeah.
But to say that everybody's going to get that, it's kind of tough, right?
Mm-hmm.
The other thing I was going to ask you too, Chuck, was so you said $30,000 difference. That's a pretty big difference. But
yeah,
what's that threshold where people are willing to play ball?
Not 30,000. So, and that's where I had a conversation with the agent and said, hey, did you run the damn comps on here?
Yeah.
And he did run the comps. And at the end of the day, it really comes down to the buyer. Okay. And the buyer was willing to go up that high. So he was excused with that because I was about to ream him a new asshole. But thank God that wasn't the situation because that's not how we train our agents. But, sometimes things happen. And also understand that when it comes to an appraisal, okay, if you, see the definition or Google the definition of an appraisal, it's based upon one's opinion.
Absolutely.
Okay. So when they do an appraisal analysis, there's three things. They do an income approach, but this is not a commercial, so we can't justify it. The other thing is the build, right? What does it cost to build the home?
Gotcha.
Okay. The second thing is comparables, and the comparables are really done within that neighborhood.
Yes.
Then within the subdivision, then they do a mile radius and also a 2-mile radius. And talking about an appraisal, probably next week we're gonna have a special guest on the show because by then we should have like 5 cameras up and running, hopefully.
Perfect.
We're going to be talking to an appraisal and kind of getting their perspective on their side of how to do an appraisal and what challenges they have in today's market. And I think that's a good perspective. So I'm going to be happy to bring in an appraisal.
I do refis and I just refinances.
Yeah.
And kind of piggybacking on that appraisal side of it, when you look at appraisals, a lot of people will look at Zillow.
Yeah.
And they look at, different things online, but what they're looking at is what they think that value is, but that's not what's recently sold.
Yeah.
And I think they get confused by that.
Yeah.
Where it's like, hey, my value, I went on Zillow or I went on to these Realtor.com or whatever, and they're like, here's my value of my house. And it's really comes down to what has been sold on those comps, not what's listed, what's been sold, and that's how they go off of it.
And, when I was speaking to the appraisal or appraiser, there are certain things that you can actually do to your home, that you will get probably 75% back. Some you may only get 10%. Some you may get 20%. But again, stay tuned until probably next week. We'll have that special guest, and I'm going to share with you guys the tips and tricks and the strategies on what you can do to actually increase the value of your home. Now, for the median price point for a home right now in the Valley is $340,000, and that's the median price point. However, what can you get with that? 3 bedrooms, 3 bathrooms, 1,946 square feet. So that is not bad at all. I mean, the last time we did the radio show was roughly about 1,800 square feet at that time. Now, if we go back to the median home price for the price per square foot at the 184 square foot, this time last year, 172.
It's gone up $12.
It's gone up, yeah, $12.
Wow,
that's a lot of money, dude.
That's a lot of money in a short window like that.
Yes. Yeah. Okay. Now in 2018 of September, right? And I'm looking at September, 167 a square foot. 2017, 146 a square foot. So
obviously certain zip codes and areas
yeah
pertain different square footage of or dollar per square foot, right?
That's a good point that you make. You're absolutely right. This is just throughout Henderson, city of Henderson, city of Las Vegas, unincorporated Las Vegas, and also the city of North Las Vegas. So remember, this is just the median. Now, we haven't even got into the average. Now, if we look at the average home that's being sold across the Valley right now, 4 bedrooms, 3 bathrooms, 2,181 square feet. They're selling for $414,434 at $187 a square foot. So what this means is, if you just want to get in the game, you need to be at $415,000 just to get in the game. I remember when we first started, like I've been in the real estate game now for about 9 years, going on 10, all right? I remember all the struggles. When I got in the game, everybody was getting out of the game. I remember when single-family residents were about $80,000.
Yes.
I remember when we started doing business together, I was hustling at $128 a square. I'm sorry, $128,000, right, per house. I mean, that is just crazy.
It's just different, man. It's just mind-boggling. You know, back in 2006, we saw these numbers.
Yeah.
But it's even surpassed that as far as today. So it's just where does it stop? Is it going to stop?
Exactly. And here's the thing: in the hype of the boom, we've already surpassed the hype of the boom.
That's crazy.
But I think what is really making this market so hot right now is, number one, I'm starting to see a lot of people from California, and I work with a lot of people from California, especially YouTubers now, that are actually moving on out here. It is crazy what's going on, and that's what's really driving the pricing up. Guys, it really comes down to supply and demand. That is just the bottom line.
Yeah. I mean, we have short supply. Consumer confidence is still all-time high or pretty high. I mean, it's just going to, if you have people, we always look at it like, who's driving the market? It's not just Californians. I mean, there's people coming from East Coast.
Yeah.
We got people coming from there. You know, but you said it last time on the show. It's Arizona, California, and Texas. That's really where people are trying to get their destination. So they're usually moving from a place with a higher median price home.
Correct.
And coming here and buying a really nice home or one of those locations.
Now, there are websites out there with migration patterns, and you can just Google it online right now, and you can see that a lot of people are coming on out here to Las Vegas, right? Arizona, and also Dallas. It's just crazy. And the reason why is because, again, we talked about this, months ago when we were on terrestrial radio. If we look at the demographics, the baby boomers, right? Over 19,000 baby boomers every day are retiring. Especially what's going on right now with this, the coronavirus, right?
I mean, you pay attention to a lot. I'm not going to go off topic, but demographics is also a big part.
That's a big factor.
Yeah, right.
And that's what people don't look at. And that's what I love about real estate, because real estate really pretty much ties into a global thing, and it ties into a macro level and a micro level. Then it comes into a local level. And what ties it all together is what the Feds does, right? What the Feds will do, It's all tied in together, and I find it very fascinating. And we know that when it comes to real estate, you know, the Freddie and Fannie, they pretty much hold all the loans, pretty much, right?
Well, they're sold to Fannie, Freddie. Yeah. Ginnie Mae.
Mm-hmm. Ginnie
does Govy.
Yeah.
Government loans. Mm-hmm. So I wouldn't say they hold. I would say they hold the majority of them. Yeah.
And that's my point. It's, look, if the feds are holding all this, right, do you think they're going to want to have this market collapse? Because they're just basically holding the bag of doo-doo at this time.
Well, and look, you look at what they came out with. I talked about refinances and how it's been a refinance boom.
Yeah.
They implemented a 0.5 point adjustment for every refinance, and they introduced that into the market.
Yeah.
And what that would end up doing is raising interest rates by 0.5 point for everybody, because everybody's in it for they're a business,
Yeah.
Government loans, FHA, VA, conventional, they're a business too. They're trying to make money. So they didn't pass it, or they didn't push forward with it, but it was implemented where they were going to do that. And they got a lot of pushback.
Yeah.
So they didn't end up doing it, but just don't kid yourself. Everybody's in it to make a profit.
Yeah. How many loans are you doing right now with buyers that are out of state?
Well, half of my business is refis. Okay. So I would say it's probably about 25%.
25%.
Yeah. There's people that I've done loans for that are downsizing or upsizing. But I would say a lot of them are coming out of state too. You have a blend.
Okay.
So I think that's what we're seeing is, I think it's always going to have a attraction where you can go from out of state to here and buy a home that's a lot nicer. But I think once you get here, for instance, sometimes we have buyers that you and I from California, they come here and they buy a home, and then they're like, I might have more family come in and living with me.
Yeah.
Or, I like the house, but I might want a different location.
Yeah.
So we've had a few that have increased in size,
Now, what else is going on with the financing market?
Rates are going to stay, I think, pretty consistent here. One of the things to look at is we have to look at Trump and how he recovers from COVID.
That plays a big factor. Isn't that crazy?
It does, man. And I think it's going to play a bigger factor because, look, if
that comes down to what? Consumer confidence, right?
That's right. And if they did pass a stimulus package,
which is I don't think they're going to.
No, I don't think so. But it's still on the table.
Yeah.
And if they did that, then the stock market would actually do well, but the bond market would suffer.
And what does that mean as a consumer if the bond market suffers? Listen to this. This is important, guys.
So we have what's called mortgage-backed securities and bonds, and they're packaged up by individual clients, and it's a lot of them, right? A lot of different loans packaged up. So it typically has an inverse relationship.
Yeah.
So if the bond market isn't doing well, and that's more of a safe haven where you put money into a bond market for a very small yield.
Yeah.
There's not a, like stock market, like you said, it's gambling.
Yeah.
But if the bond goes down, the bond price goes down to entice people, they have a higher yield. So in essence, it actually raises interest rates.
Okay.
So as it's an inverse relationship. If bond prices go down, mortgage rates typically go up.
Okay. And when it goes up, and what was the reason again that it goes up? I'm sorry.
There's many reasons. I mean, it's the unemployment, the overall economy, a lot of data that they read, but mostly it's about, there's consumer confidence that's involved, gross domestic product. A lot of these things play a part, but basically it means that if the bond price drops to entice investors to come back to the bond market, they show that there's a higher yield on return for the money.
Yes.
And so that's when actually that mirrors what mortgage rates do.
Okay, so they come back. So let's just say China comes back and buys the bonds, right?
Yeah, so let's say the stock market, you put money into the stock market and you're gambling, right?
Yeah.
Well, there's no money in the bond market. Everybody thinks the economy's doing well.
Yeah.
So
they want to bring them back to the bond market.
Yeah.
Right?
So to bring them back to the bond market, to entice investors to bring them back to the bond market, that's when that fluctuates. Now, obviously there's other data, but when you see that, that's the reason why rates go up or down.
I never understood this though. Other countries want to buy our bonds, but these are freaking 15, 30-year bonds, dude.
Yeah. Long-term bonds.
Exactly.
Not short-term bonds.
And it's and these bonds, they don't really pay that much.
Yeah.
And it's the 30-year bond pays less than the 10-year bond, which is crazy. I think it was like only like 2.7% or something like that.
Yeah, and it's like they always get out there where it's like the Fed.
But it's secured though.
Yeah, that's true. Why. Here's the thing. So the Fed always comes out and says we're raising rates.
Yeah.
Okay, and it's like, okay, well, what is that on? You know, like, oh, we just raised the Fed's fund rate, right?
Yeah.
That's on short-term bonds, student loans, car loans, credit cards.
This is important. I want you to get really in depth with this because I was misled by this too as well at one point. Yeah. Where you had to educate me because when, like you said, when the Feds come out and drop the rates, I'm thinking home pricing will go down, but it also depending on the type of bond, right?
Yeah, it's a type of bond, but it's also, you have to look at why the information is coming out.
Yes.
What is everything being driven by? It's consumer confidence. You brought that up earlier.
Yeah.
So when you look at what's happening in the markets and you look at, well, why would they want to lower rates and publicize that? Because ultimately what they want you as a consumer to be doing is out there spending money.
Yeah.
They want you out there spending money on certain things like, well, if you got, let's say that you get a smaller yield or you refinance something or the cost of a student loan, the rate's lower. That means if you're making a certain amount of certain amount of money monthly,
yeah,
then you can take that money and you can redistribute it in other areas, like, you know, going out and buying things, you know, goods and services. So it's all a strategic way really to kind of plant that seed. So you're out there spending more money.
So as a consumer that's sitting on the sidelines thinking about that if rates are going to drop even lower, right? Mm-hmm. So when we talk about the bond market, so which bond market should they be looking at when the Feds come out? Are we talking about like a 30-year bond?
Yeah, it's a long-term 30-year bond.
Okay, so that's so it's not a 15, it's a 30-year, right?
Yes, that's correct. Yep.
Okay. And I think the Fed's funds meeting is every quarter, I believe it is.
That's right.
Correct me if I'm wrong, guys.
See, the thing is that there's outside factors, there's things behind the scenes that people really don't know what affects mortgage rates.
Yeah.
And long-term bonds in general. Yeah. You know, like we were talking about, it's geopolitical news, you know, things that's happening outside this overseas or something like that. And then also things like unemployment data.
Yeah.
You look at consumer confidence, you look at what's going on overall, gross domestic product, you know, inflation reports. Yeah. All of these things play accumulation of things like this will play a considering factor of what happens if rates go up or down.
Yeah. And if we take a look at our GDP, I think we're less than 3 basis points right now.
Yeah.
I got to look at it. I haven't looked at it for some time. I used to look at it on a consistent basis, but I know we went up, but especially with this coronavirus, it just dropped.
Yeah, it's hard to gauge with the coronavirus because, I mean, it's numbers, but I think for me, it's like a starting point where we were looking at the unemployment. Mm-hmm. That's strong numbers. Like we were at like 15%. Yeah. Right? Boom, everybody just got hit. We got rocked, right, with that COVID. But now that you see that we're now only like 7.9%, we're starting to see things look up.
But also, I want you to take a look at unemployment in 2 ways because you have, you know, United States is unemployment. You have one, then you have the local level, right? You have the macro and the local level.
Yeah.
So whatever's happening here is completely different what's going on throughout the whole U.S. I mean, just because we're at 7%. I mean, here, I think the last time I looked at it, I could have swore it was like 14%.
We're high here because if you look at it, leisure, hospitality.
Exactly.
Those things.
Fact, let me pull that up.
Yeah, those things had a harder impact here.
Yeah. Exactly.
And, you know, traveling too. So when you have a state that's reliant, I'm not going to say solely anymore because we've really expanded out.
Yeah.
But it's reliant on a lot of the hospitality and you know, service industry. You're going to see a bigger impact. And so I think that's what we're seeing. And
we are. And the question is, how come home pricing has gone up? And that's where we talk about a lot of these people that are moving here is from out of state. And also a lot of them are working from home.
Yes.
Isn't that just crazy to you?
Yes. And I think some of these companies, these big companies, they're going to start to keep that as a mainstay where you're going to have the option to work home full time.
Yes.
Even when everything recovers, you know, or we get a vaccine, you're going to see things change a lot. I think once they promote a vaccine, you know, you got the election. If they ever get a vaccine, I think things are going to change. But I think, you know, looking at all this data, I think people are going to really probably elect to stay home because it's more convenient.
Yeah. There is a young kid that just bought a home and we worked on this deal together. And we literally just closed last week. and he works from home. Initially, he was working at the office.
Yeah.
But they transitioned him to go work at home. They gave him like a full desk and everything, man. I'm like,
yeah,
everything is just changing.
Well, brick and mortar.
Yep, gone.
It's gone. I think it's not gone completely, but it's definitely going to be. What are they going to do with all these commercial buildings?
That's what I'm saying. So this is what you need to do is take a look around of what's going on. And right now, I'm actually looking to purchase a commercial.
Yes.
Right? Now, when I say commercial, it's not a commercial building. It's a multifamily. However, every once in a while, I will look at the whole commercial as a whole and realize that on their website, there is a high fluctuation of sellers now that are selling their commercial property.
Are they giving deals?
Not deals, but it's on the market right now.
Okay.
I haven't seen deals, but as far as like the data, the numbers, I've seen it grown. And I've noticed they're just trying to sell it. But then the ones that I'm looking at, these are like more, strip malls, like small little strip malls where you have mom and pop shops, cigarette shops, haircut place, they have these little small shops, and it looks like they're just trying to get rid of all that right now.
Maybe there's just not, like, after everything's said, I mean, a lot of these places, they probably won't even open up shop anymore, because they're like, okay, with all of this stuff going on, my book of business may have slowed down. They might not come back.
Yeah.
And they're
Why would they?
Yeah, and they're reliant on that book of business that they have. It's more of a referral, or, it's not like you're a big corporation out there marketing yourself.
Yeah.
So I get it.
Now, the other thing I want you to take a look at is that the number of home sales that we had. So last month, we sold 3,285 homes.
Wow.
Year to date, 2019, we sold 2,753 homes. 2018, 2,438 homes. These numbers are climbing. It's unbelievable. The supply line right now, we have less than like 2 months on the market.
Wow.
For resales. Now, let's get into new homes. New homes I find very fascinating because I do love new homes. I do love to build new homes for clients, and I enjoy really speccing out the homes. The good news for you is that right now, a lot of new home builders, they're no longer giving out incentives. So that's good for you as a lender.
Yeah. That's a big slap in the face when you hear that from them. Like, builders are giving me something. What can you give me type thing,
I remember I was getting like $30,000 in incentives. I was able to negotiate the lot premiums. Now you'll just get transfer tax, right? And owner title policy, and that's pretty much about it. It's just crazy.
What I was going to say is, and I don't know if this is true, and this is something maybe you don't know, I'm not sure, but if I don't know something real estate wise, I usually come to you. Yeah. So I was reading that 5.1% of new home builds were down up to this point, across the nation. Is it up here in Vegas, or are you not sure?
Yeah, like here in Vegas, it is up. Okay. Now, also depending on the price point. So, like, if we're looking at homes around the 500,000, they're going to be gone. Because remember, we talked about this. The average price point for a home right now is $415,000 for a resale home, right? But then you can buy a brand new home for like $450,000. I mean, you can even buy a brand new home right now, even like a townhome, for $240,000.
And
that's crazy, dude.
Yeah, that's so crazy, because where's that threshold where you're going to start to see where people aren't going to get what they want for their home?
Yeah.
And the values drop. And usually if that happens, either they take it off the market or they drop the value. And ultimately over time, it'll suppress the actual median price of homes.
Yeah.
Do you see that happening anytime in the future?
Now, here's the thing. October 15th, all the people that have not been paying for their mortgages.
Good point.
Right? That's about to come around the corner. How many defaults do we have right now? I think it was, like 2 million defaults around the U.S.?
Yeah.
Some crazy shit like that?
Plus.
Well, what about the renters that are
not
paying?
Yeah, good point.
And here's the thing. Some of these landlords are not making the mortgage payments.
Yeah.
So they better hope for this damn stimulus. You see what I'm saying? Now, I just put up an unemployment. An estimated 15.5% of the Las Vegas area workforce was unemployed in August, down from 16.6 in July, according to the reports on Tuesday from the Department of Unemployment, Training, and Rehabilitation.
Wow,
that's a pretty big damn swing. That's like double.
Do you think these people have been sitting on that money, even if they got another stimulus? You brought up a good point.
Yeah.
That would they try to at least make a negotiation agreement with the landlord, or would they just say, I'm keeping the money and I'm keeping the stimulus and I'm out?
I think that's where government kind of messed up. You know, they created the stimulus, but the only people that is holding the bag of shit is the damn landlords.
Yeah.
And at the end of the day, they're responsible, which really sucks. They should have had something in place stating that if you're getting this much, a certain percentage automatically goes to your mortgage or your landlord.
Yeah. Remember we had that guy, one of the people we used to call in at the other.
Oh, he was pissed.
Oh, he was upset, man.
So there was this guy that called in on a radio show a few months back, and he got Dan a little bit flurried a little bit. He's a little bit crazy on the radio, but
I thought he was going to track me down there,
He was pretty upset the fact that I think he had like 16 properties and none of them were paying. Or it was just something crazy
Look, I get his side of it.
Yeah.
I do.
But you also got to have some companion, not companion, but you have to have some
compassion.
sort of compassion or sympathy for some people, especially when you go through a crisis like that. However, I'm sure you should be able to work something out. But if you know that guy's getting money, right, and he ain't paying it, that's not cool either. So I see both sides.
You always say it's a case by case.
Yeah. Now, I think Jason was talking when we were on the radio at one point, and I could be wrong. I don't know where I heard this from, but there was a case where the landlord actually stabbed the guy or something. I could be wrong with this story. I could be making this thing up, but it sounds good. So basically, the tenant was staying in his property, wouldn't pay, and he was having parties. He was buying like all kind of stuff, and he tried to lock him out. Something happened. I guess the landlord ended up stabbing this guy or something like that.
My God.
I mean, just imagine that. Like, you work your ass off to buy an investment property, right?
Yes.
And then the guy's not paying you, but he's taking advantage of the situation. Like, what do you do?
Well, let me ask this, though. So, case by case again, but you got banks and negotiation within banks if you own the house. As an investment property, would they have more compassion about giving you a break where you don't have to pay your mortgage? Maybe they put it to the back end of the loan.
Well, they do. It's loan modifications. I mean, they're already doing that.
But I mean, compared to a primary residence, like if you own 10 properties, and let's say, obviously, if you have a primary residence, you got your family. If you have kids, they're living there. But how do they look at it if you have an investment property? Is it looked at different?
Well, like I said, landlords are pretty much holding the bag of shit. Yeah. So if you ain't got your portfolio right, you're pretty much screwed.
Wow.
Which kind of sucks because a lot of these people that do buy investment properties are just getting into the game. They're only making like $200 cash flow. I mean, you go 1 month without paying, there goes your cash flow. And to me, that doesn't make any sense to buy an investment property and make $200 a month. Dude.
Yeah, and then, I mean, I don't see this happening, but you think anybody would be able to file some type of bankruptcy or anything like that if they ever got in a situation like that?
Well, I'm sure you could file for bankruptcy and tie up the property and play the whole game, but I mean, who wants to do all that?
Yeah.
I mean,
and then also you got a negative mark on your credit.
Oh, yeah.
And then you got to go all these things, and then now you're kind of stuck. It's a no-win for a lot of these people, man. But you have to look at it on, let's not look at it just from the standpoint of investors. I mean, some of these people lost their job. So
that's true. Remember, unemployment is what, like 15.5%? Yeah. That's a lot of people.
It's a lot of people.
And you also got to understand that people that do live out here right now, they're also having a hard time to even get into the game, right? And here's why. The median price point for a home is like the median average household income is only about $51,000 here in Nevada. I mean, if we're at $415,000 for an average house, that is what, 2, 4, 6, 8 times the income.
Yeah, and
that is unbelievable, dude.
We always brought this up, and it's always a valid point. Does the average person here making the median wage that they make or the hourly wage that they make here, is the homes exceeding what people can actually afford working and living in Las Vegas?
And that's what I'm saying. It's like they're almost house broke at this point. Like, I bet you their debt to income ratio is like 50%.
Yeah, it's crazy. I mean,
I would never buy a home and at 50% debt to income ratio, dude.
Well, here's what they're doing.
Yeah.
Let's add mom and dad to the loan, right? This is what I'm seeing.
Okay.
Let's add somebody else that can jump on there with that income. And
like a co-signer?
Yeah. Okay. That's what I'm seeing a lot now. I mean, unfortunately, until things change and until the market changes, you're probably going to consistently see, not everybody.
Yeah.
But, I think there's a lot of people, like you said, working from remotely too, that even if they're not from California or New York, they might be a CEO of a company working out of another state, and it's like, hey, I can work from home. We're qualifying people like that too, where they're working from home and we can use a human resources letter and stuff like that to qualify. So we don't always look internal as far as Las Vegas and say, can Las Vegans really afford these homes?
Yeah.
Because a lot of these people are working from home and they're making a pretty good living.
Also, what I noticed, a lot of these homes that are being sold, the type of financing, a lot of them are going conventional, and it seems like there's no longer FHA loans out there. And what are the guidelines, the max guidelines for this county for FHA?
So if you do an FHA loan, I want to let everybody know, okay, so there's two things to notice. The first off is every county has a county limit. It's $345,000.
Okay.
Now, where people get lost a little bit is you have a upfront mortgage insurance premium that FHA charges.
That's where they get you on the damn payment. And those things are like $150 a month.
Well, let me say this. So they actually add 1.75%.
1.75% of the total loan amount?
Yes, and then they tack that part of it on top of that loan.
Ooh.
So look, you guys say, why do they do that?
Yeah,
right?
Yeah.
Well, FHA, VA, government loans, they're in their business too. They're trying to make money. I mean, there's no real reason for it.
But that's also here's the thing with FHA loan, it's in a backed up insurance company. That's what you're paying for, right?
Well, it's insurance, and also too, that's one of the reasons they're charging it is because they know that they can charge it. Yes, it's a way for them to make money, but it's also a way for them to get the insurance and have leniency on those loans. But it's still they're making profit off of it. I mean, let's not kid ourselves.
So what you're saying is for $415,000 on an average home times 1.75%, you're paying $7,200.
That's yep.
And they divide that by what? The 30 years?
Yeah, no. So what they do is they take 240 or 345, and then they put the 7,000 on top of that. So your loan amount's now 352.
Okay, so I got you. So now it's at the 352, and whatever your debt to income ratio is, whatever your credit score is, that's what it breaks down.
Correct. So not only are you paying them back, but your payment goes up.
Yep.
Right? And your loan amount goes up.
Gotcha. Ooh. So why do you think everybody's going conventional at 3% down or even at 5% down versus going FHA?
Price point, just like you said.
Okay. And you just hit it dead on the nail, and that's what I was trying to get to, is because of the average price point, $415,000 across the valley.
Yeah.
And at FHA, you just can't really get it.
No, and I think, let's be honest. I mean, we don't really deal with FHA buyers.
Yeah, I know. Which is a good thing, because the guidelines when it comes to the appraisal, it's a little bit tough.
Yeah. And I'll tell you, if you're a veteran out there, one thing that we do is there's certain companies that offer perks. And what I want to say is that as a veteran out there, if you're a VA buyer, we charge no fees. And so that makes a big benefit it's a huge benefit as far as overall cost. A lot of times you want, veterans come in and they're trying to save every dollar that they can. A lot of them have, very good assets and things like that, but they just still want to save money. But also you look at what is the price point of how much they can buy up to, and it increased this year to $1 million. Yeah.
Now, if I take a look right now on the data for the last 30 days for single family residents for FHA sold terms. Now, what that means is these are homes that closed in the last 30 days on a Federal Housing Administration.
Yeah.
Okay. Only 705 homes. Now, if I went conventional, let's see what conventional is. 1,519, which is double the amount. Now, this is what I want to get into, and this is important right now. We're going to do cash buyers, okay? Now, cash buyers are only...
That's a good point, cash buyers.
Yes, okay. This is 432 cash buyers. Okay, conventional is 3 times as more. So the reason why I'm making this point for you guys is because if you call me up and you're like, yo, I'm looking for a discount, I'm a cash buyer, you pretty much have no leverage. because of the way that the market is with the supply and demand, right?
Mm-hmm.
You have to understand a seller is willing to accept a higher offer from a conventional or financing buyer if it's offered more money. The only benefit you would have as a cash buyer is that, number one, you can close a little bit faster, right? You can only close as fast as the selling agent and as fast as the listing agent, and also as fast as the title company pulling all the prelims and getting everything all squared away.
Mm-hmm.
Okay. Now, here's the thing. If you are a seller, and think about this, the market is hot right now.
Yeah.
If you can make additional $10,000 by waiting, right? 14 more days.
Yes.
Would you do it?
Absolutely.
Exactly.
Yeah.
Right. Now, the only benefit with the cash buyer is just there's an appraisal that needs to be done. So that's the only benefit.
So you're seeing that, and I mean, obviously people are buying cash. What is the percentage of people buying cash that's a primary residence?
Well, right here, based upon the data, it's about 25%.
Okay. So you're saying 75% of other cash buyers are buying for investment?
No, what I'm saying is that if we take a look at cash buyers versus financing buyers, it's only about 25% of the market.
I see.
Okay. But now here's the thing. I don't really have that many cash buyers, but I do have cash buyers that have the money, but they are not putting all of it down.
So when I was working with other people and I've had, everybody always like, send me those cash buyers quick. I want to talk to them. Mm-hmm. Are they harder to close then? And
what do you mean? Like for the buyer or the seller? What are you talking about?
For the agent. Like if you have an agent, like let's say if I was calling and I talked to somebody and it's like, yeah, I got a cash buyer referral, and you send it over, they're always like, yeah, make sure you send me the cash buyers, right? But yet, do they do more work? Is it more work involved? I'm just curious.
No, it's not. It's just the transaction. The fundamentals are already the same, but every transaction is unique and different. You'll never have the same transaction. And this is where a lot of people are just misled. They think you just go out and buy a home and that's it. But there's so many moving parts that people are just not aware on the back end.
Yeah.
Especially, protecting your clients, knowing what's going on within the industry. You got to be in compliance. And you got to just know the trick of the trades. And that just really comes down with experience.
Yeah.
Because here's the thing. At the end of the day, it's really your sole responsibility to represent your client and to make sure that you're really crossing your T's and dotting every single I, and also providing all the information that they need to make that sound financial, decision. There you go.
It's really case by case then.
Yeah, it is case by case. But there's always something that comes up, but then it's just like, how do you resolve the problem, or where do you go get the information? How do you tackle the situation? And there's a lot of people that when they come to a transaction where they figure, hey, you know what, this is too hard, they just give up.
I think this is going to answer itself, but I've never actually asked this question to you. Mm-hmm. So what about somebody that has cash and they go buy a new home build? Is that different?
Not at all, because with new home builds, they would never drop the price of the home. And with all cash, it's still the same. Cash is no longer king.
Yeah.
Money is king, no matter what, man. Here's the thing. It's like at the end of the day, paper is now digital.
Yes.
Everybody would rather just have digital. It's like, even with the earnest money deposit, I couldn't even tell you the last time I actually had a check, a cashier's check, and delivered it. It's all like wired.
I had somebody the other day tell me, can I just drop a cashier's check to title?
Yeah.
Or just a check in general. Mm-hmm. And I said, yeah, you can do it. The difference, though, is these title companies, it usually takes time to clear, 7 to 10 business days, sometimes even longer. But that would jeopardize your closing. So I think it's, the wiring and everything that goes on with that. I don't know. I can't remember the last time either.
Now, is there anything else going with the financing sector?
Not really. I think it's kind of one of those time periods where I think rates are going to stay the same. I don't see any geopolitical news right now going on that's really making any huge impacts either way. So, what's interesting, though, is I want to say, if you're somebody out there that's self-employed, okay, we did implement as lending institutions and putting out Fannie Mae, Freddie Mac, mostly Fannie Mae. They put out where it's harder to get financed through being a self-employed buyer. And so I wanted to put that out there because, if you're somebody out there that's self-employed, 68% of buyers that are looking to get self-employed approved are not getting approved. And it's because they're looking at the post-COVID, what is your business doing? Is it staying consistent? So what lenders are actually asking for, and really it's coming from Fannie Mae, is do you have an audited profit and loss from your CPA, or can you prove that you have a profit and loss and also cash deposits or just deposits from the business in general from your business bank account?
So is it harder to get a loan? Is that what you're saying if you're self-employed?
Yes, because if you look at the data and the statistics, self-employed buyers hold the highest ranking for defaulted mortgages.
Oh, wow.
And so they're scrutinized a little bit, and so it's gotten worse, especially after COVID. And so there's a lot of things that's happening in the scenes that, there's calculation worksheets.
Yeah.
There's all kinds of stuff now that lenders are doing because the last thing they want to do is try to sell a loan to Fannie Mae or Freddie Mac, Fannie Mae mostly, and they don't want to buy the loan because we didn't do our due diligence as a lender.
Yeah. What about jumbo loans right now? And what's the minimum for a jumbo loan? When's the jumbo loan start?
So it's $510,000. $350 is the cap for conforming. Okay. So anything above that's considered on a conventional level.
So go back to that for some of the new listeners. When you say 350 conforming, explain that.
So if you're under that criteria,
350,000.
No, 510,000, 350. If you're under that, then what it does is it gives you opportunity with guidelines. And again, it comes back to the insurance. It comes back to certain guidelines that are helping clients put down 5 or 10% with the insurance. I mean, that's the reason why mortgage insurance is there, to offer buyers a lower down payment. So when you exceed that, now you're in kind of your own little territory.
So what happens if you're at 600,000, but you put down 200,000? Now you're still within the conforming guidelines now, right?
100% right.
Okay, but is that considered still a jumbo loan?
No, because it's now the loan amount
is below it. So if the loan amount is above it,
that's considered a jumbo loan.
Okay, and what about the rates? Are they higher?
Not necessarily. I
really?
mean,
I thought they were always higher, and you had to put more down.
So the restrictions are judged harder, but your credit and the criteria that you have, sometimes it's not higher. Also too, that's when I really start to implement adjustable rate mortgages, index and margin, things like that, because sometimes people don't want payment shock.
Yeah. And
what payment shock is where you get into maybe a house that's a little bit more expensive because the mortgage is a lot higher. So maybe you give that option. You got a 3 or a 5 or a 10-1 arm that maybe you look at. And so by the way, LIBOR is going to be changing too. It's going to change. I think it's called SOFR. It's a new index that they're going to be looking at. And so, things are changing. But when you get into a jumbo loan, the restrictions are greater with down payment. Yeah. You typically have to have 6 to 12 months, what's called reserves. And also, it's now more of a niche bank. It's not, there's no magical criteria out there that you're under this umbrella of Fannie Mae or Freddie Mac. Now it's each individual investor has different criteria, different restrictions. So if prices keep going up, you might start to see more jumbo buyers out there, especially since money's still cheap.
I thought the county was going to change the guidelines on FHA and also the conventional as far as the limits.
Well, they have meetings, or if you want to say they're meetings, but they have updates every year.
Yeah.
In some cases, they haven't changed it. Most of the time, they change it, but they have to take the data and see, what is the average median price home. Since we're increasing, I can't see why they wouldn't increase it here.
Exactly. It just wouldn't make any sense.
Yeah.
Gotcha. Anything else going on with the financing? Oh, let me ask you this real quick. Your last deal, what was your interest rate that you locked in?
Okay, so I'm going to give you a range because everybody's different, but I locked in at 2.75. That was my very last thing I've locked in.
But it's case-by-case scenario.
It's case. Now, there's 15-year fixed loans where you can get down to 2.25.
Yeah.
But you're also, if your credit's not good, you could be in the low 3s. So it really depends on what your goals are, especially if it's programs too. Like you go to conventional, to VA, to FHA, or whatever it is. VA is going to have the best pricing available.
Yeah.
So it really depends on, there's a lot of factors, a lot of layers.
Another topic that we didn't talk about, and I think I wanted to bring this up. Somebody mentioned this in the comments. As far as taxes, I've noticed property taxes have gone up a little bit, especially on a couple of my properties on the mortgages. And there were some shortages that I had to pay. And if you guys are not familiar with shortages, is basically your principal and interest will always be the same. Correct, Dan?
Yeah.
Okay.
Yep.
And obviously that's on a fixed rate, okay, not on an adjustable rate. However, there's taxes and also property taxes and also insurance can also go up. So understand this. Your payment may go up slightly. So mine went up a couple bucks. But if there is a shortage, you pay that and it should be the same.
Yeah, I want to say, though, about the principal and interest. So there's an algorithm. Everybody always wants to look at that 30-year algorithm, right? And in the beginning of the loan, you're paying the most interest. But as you get closer to like year 16, if it's a 30-year,
then it goes towards principal?
Then it inverses. And
Okay.
now what happens is more goes towards principal and you have less interest. Your payment stays the same, but the amount as you're making your payments as they go down, that changes.
No, I got asked this question before, and I thought it was very fascinating. I had a client ask me, should I do a 15-year loan or should I do a 30-year loan? But we know on a 15-year loan, the interest rate is a lot lower than a 30-year loan.
Yes. Misconception, though.
Yes. What is it?
Your payment's a lot higher.
Correct. But the rate is lower. So this is what I don't want to say tell my clients, but this is my thought process. It's why not do the 30-year? So that way, if you have to short yourself 1 month, you can.
Exactly.
But then mentally, right, just pay towards the principal of which you would have paid anyway on a 15-year.
That's right.
Wouldn't that make more sense?
100%.
But I think what happens is a lot of consumers, if they're not getting that monthly bill, you know, where they're going to pay more on a 15, right?
Mm-hmm.
I think it's a mindset.
Well,
they just end up paying whatever is required to pay.
I think they're fixated on rate and rate alone.
Yeah.
They don't know like the impact that it's having, or what is those real numbers I'm saving, or am I saving? What other alternatives and options can I have?
Yeah.
Putting down a $50 or $100, if you did that consistently, you might pay your house off in 22 years.
Yeah. I mean, that's just crazy. On a 15-year, just imagine you paying like $3,800 a month, or do a 30-year for like $2,200 a month. You see what I'm saying?
Yeah.
I would rather go on the 30-year. To me, it just makes sense.
As a business owner,
yeah,
if you're truly running a business, and let's say, you know, look, you got to look at your house as a business. I know primary residence, when you buy it, you're still living there, and it's more of like, hey, it's an emotional attachment too, but you still have to run it as a business. And so I would rather have more money in my pocket, diversify it how I want to diversify it, instead of sinking it into a house knowing that I have to make that extra $400 or $500 payment, and it's going into a house that I can't pull the money out right away.
And also the other thing is, like, if you're doing a 15-year, but your debt to income ratio is pretty much pegged out, you're pretty much house broke, you don't know which way that this economy is going, you probably want to do a 30-year.
Yeah.
I mean, think about this. If you're working your ass off, right?
You can always change it too.
You can? Like, you can switch it?
Well, I mean, let's say you're in the house for 6 months.
Yeah.
And you know rates dropped or whatever. Go refinance into a 15-year fix.
Yeah, but then you got to pay another like $5, $6, $7 grand.
Well, I think
then it re-kicks it all over.
You're right, but what I think it comes down to is
I understand. Like, if you're within a year,
Yeah.
that could make sense. If you're saving, you know, a substantial amount of money, that would make sense. But if you're already into it for like, 8 years, do you really want to start all over again?
No, I see your point. I
See what I'm
do.
saying?
I think it's more of like, did I get into it and maybe I reconsidered after I got into it right away?
Yeah.
Okay, you haven't paid, like you said, it's front loaded. The interest is front loaded
Yeah.
on mortgages. So that might make more sense to do it then. If you're in it 8 years, don't do anything.
Yeah. Also, I want to talk about if you're going to refinance, right? Let's say if you did refinance and it cost you a total of $7,000, but you're like, I ain't got to pay nothing, which is, I understand, but it's tacked on to your mortgage.
That's right.
But if you're only saving $50 a month, all you have to do is do the math and just take $7,000 divided by $50 a month, tells you how many months you got to stay in that property just to get that money back.
Yes.
So now the question is, how long are you going to stay in the property? And that should answer your question.
100%. I mean, I mean, you get it. And the thing is too, is this, like, if you're thinking, well, should that 15-year fixed rate or 15-year loan, should I consider it at that point? If you're in it 8 years,
yeah,
maybe that's the only option you consider, but I wouldn't go back into another 30. You know what I mean? That might be something I would think about, because then you're shaving, another 7 years off of that loan.
Mm-hmm.
But man, it's got to make sense. Like, you got to run those numbers,
Yep.
And so that's where you get, like, most lenders, they always are like, sell, sell, sell. We're going to get you the rate. Just go ahead and do it. Just like we'll lock it in for 24 hours. You want to do it? Yes or no? Mm-hmm. It's like, that's such a car salesman thing. It's like, let's have a real negotiation,
Now we got a couple more minutes here before we finish up. Dan?
Yeah.
French with Guarantee Rate. You also do have a website too as well.
I have a website, vegasloanguru.com. You can go there and start an application, kind of look at my company. Also, I have a YouTube channel. I just started it, and just kind of seeing how things go there. So
what's up with that YouTube channel, man? Tell everybody about that YouTube channel.
Well, I'm just trying to put out some good content, want people, everybody's trying to do that, put out content, especially in the business world. But I think it's just relevant content that's going on in Las Vegas, and it's just under Dan French.
Cool.
Yeah.
And if somebody wants to get the process started, we can go to what's the name of that website?
vegasloanguru.com.
vegasloangurus.com. Hey everybody, I just wanted to say thank you so much for tuning in. Thank you so much for the comments. If you have not had a chance to subscribe to the channel, go ahead and hit that subscribe button. Our plans are to do this every single Wednesday. I'm not too sure what time yet. We're just kind of free flowing everything. Also, we're gonna have another show. Typically it's supposed to be every Friday. We're gonna be talking about everything that has to do with Las Vegas. And other than that, I really appreciate each and every one of you guys from the bottom of my heart. So go ahead and subscribe to the channel. Here it is.
We're doing it tonight, though, right?
Yeah. I had to fucking cut that shit already.
Was it not getting good?
No, it was. We were just already in for an hour. Hello? How come? Why she ask for a ride home? I'm wondering where her car is. I mean, here's the thing. The question is, if she does this, how